Good afternoon, everyone. Welcome to the weekly Delphian meeting. Thank you for tuning in. Today's agenda will have the market update, and the earnings trades are just starting. So I think the first official non-estimated trade is today, came out this morning. So not too much to go over there. And Joe is on vacation, so just me. So maybe a little shorter. But let's get started. Okay, overall, the market overview. Still got NASDAQ, SPX in state 1 and Russell in state 5. So no real changes from last week. You can see green pie overall. Last week we were at 65, so we're at 69 right now. And we'll go into the market pulse right now. So you can see, we talk about this all the time, things start leveling out and then they eventually, it's like gravity, they come back and turn. So we'll have to see, right now we got up to 70. So just a slight drop, from the 16th to Monday here, Tuesday. So yeah, so I guess Monday was off Tuesday. So what to see if we do plateau up here or reverse, that levels around 70 is kind of like a normal-ish type area to, start turning over. But obviously, we got to just keep our eye on it. So that's all there. Starting to see some new highs, which is very bullish overall here. So this is the 1 year new highs, new lows. So we started getting some back here February, but had some nice pops here. Grand scheme, not like huge, but starting to see a little bit. So that makes me a little bullish, but still not sold on this whole thing yet. But definitely like an encouraging sign. So, we'll have to keep our eye on that. Also, definitely nothing going on with the lows, as they currently are. So, just keep our eye on it. This is kind of just chopping back and forth, nothing really going on with a 200-day. So let's look at the individual states. All right, let's get out like a year. Okay, so we had that crossover. Back in the bear market, those crossovers most of the time were near the top. So I wouldn't say it's the top. I mean, that looks like a top there, but we'll have to wait and see. But that's how that whole bear market went. Then kind of went sideways for a long time, and getting a little momentum here, but like I said, I'm not sold on it. So we can look at the 7s and 5s. That's kind of like my best way to figure out if we're going to get like a sustained rally. So the 5s have been kind of slowly creeping up, but if we take that out, you can see the 7s and 8s pretty much most of them just flipped here in the past couple of days. So that may be the probably short-term top right there on the 15th. So you see things starting to turn over here, but not getting, excuse me, not getting a lot of movement from 7 to 5. It's kind of 7 to 8. So, we want to see these 5s really start picking up like here. Sorry, there's a lot of lines like here. So you can see the 5s really picking up. So those 7s start dropping, the 5s start picking up. Even down here, we see them start picking up. Here, they're just slowly very methodically, barely incrementally increasing. Whereas you had this 7, yeah, this isn't really, I mean, that's just like a huge move. And we topped out here, and we'll have to see if we start getting those 5s instead of the 8s. But right now it's looking like more 8s than 5s are going on. So that's it on the market pulse. Let's pull up our SPX here. So we're staying above the 42 so far. So that's the bottom end. Top would be 46. So kind of right in the middle of that range, around at 44. So what I'm looking at on this chart will be this target 3. So just call it 43.40. So see if that holds as we get lower here. That'd be definitely like a bullish sign. If we can stay above that target 3, down below that is the top of the previous range and the bottom of our current range at 4,200. So really, I'm just kind of, short-term downside. This is the next few days, seeing if that 43.40 level will hold for SPX. We've been in this for a long time, 51, 43. Obviously, if we get some kind of downward, big downward movement, then obviously it's going to go down into 2. Let's look at the chart here. You can see, I just felt like it was too much, too fast. So we did turn around. We're at 4,400. So this is the bottom of the range, that 50-day. So we have that 43.40 kind of right up here. And I guess I can annotate that 43.40 kind of like right in here. And then obviously the bottom end of the range is that 4,200. So those are kind of the levels to watch, to the downside. Obviously, that 50-day and the bottom of the range, 4,200, should be really strong support at this point. We're pretty, good chunk away. The top of the end of that state modeling target 3, that's really going to be, I think, the key in the next, day or two. See if that holds. If that provides support, then we can get a run up there. So really it's just, we're in that, sorry, it's not even on the chart here. We haven't been up, to that 4,600 in a long time, kind of back here. That's March of 2022. So it's been a long time, so that top end of the range, the current range 42 to 46, that's the top end. Obviously, this kind of a exponential almost move here, short term. So we got to pull back. Really, it's just okay. We're going to hold that target 3, and if that breaks, that 4,200, the low end of the range, and the 50-day. So that's where we're at on SPX. Russell, the poor Russell, can't break that 1900. Wasn't really betting on that thing breaking through. So lots of tries here. So last Tuesday, 1907, 1904, not that day, 19, call it 7 again, then kind of a downward movement here. So obviously 1900 is our critical level. So that's what we can kind of garner to the upside, is, our strong resistance. So, and we can kind of use SPX for, downward, support levels. Here, this is top end of the range, 19 to 17. Annotate. So 19, 17, that's our range. Obviously 19, in order to get to target 1, we'd have to, get through at 1900, or 1907 was the current high in the state. So it's a little bit further, but that's going to be the first level of resistance in this state, which you can see pretty close to where it turned around. This is first level of resistance between 1 and 2. Didn't quite make it there and turned around, but pretty much a couple times tried and failed. And that's really 19. That's our keep beating a dead horse on this one, but can't break through it. So okay, so let's look at the chart here. Let's pull it out. There we go. Pretty crazy that level's holding like that. It's such a this is range bound with a few minor breakouts down and up. Pretty much, this is from over a year, kind of, I would say, kind of channeling. So at some point we're going to break out of this range. I'm not betting it's going to be in the near future, in the next few weeks or so, but we'll see. We'll just keep our eye on that 1900 to the upside, and kind of use the SPX for the support to the downside. That's kind of where I'm at. So let's see what else we got. I didn't find any good gifts out there, so sorry. I was looking, but nothing good came out on Twitter that I saw. 10 years pretty much. Let me clear that. 10 years kind of just staying above that 3.5, right around 3.75 is kind of where it's been hanging. So you can see it's 3.75. We got below 3.5 here, just pop right back up, kind of like a magnet almost, for quite a while at 3.5. Yeah, it's kind of like floor there, you can see. So we'll see if this breaks out. Obviously, if this goes higher, that's going to be problematic for the market, I think. As we always talk about, where people allocate their capital, the highest return for the lowest amount of risk. So if that keeps going up, if that gets back up in those fours, it's going to be problematic. Okay, let's look at Fed. I know there's a lot of Feds talking. This is July. We're about a month out from here, 35 days. So pretty much 80% probability that we're going to get a hike there. So everyone here knows my stance on this. Should have stopped a while ago, but they keep talking about hikes, and I think inflation, it's kind of like rotating through different areas. Personally, like things that I buy all the time, like the store shelf type stuff, long term, like chips and all that stuff that's, on the inside aisles of the grocery store. Those prices haven't really come down. If anything, they've gone up and held, like chips, pretzels, and cereal, all that stuff. A lot of it, has gone up, and some kind of shrinkflation, where they kind of decrease the amount in there. So I haven't seen much drop in those prices, but I'll tell you, like what I watched real close is eggs, the egg roller coaster. So like I go to Walmart and to get my eggs, and they have like a 60 pack, because I got a son that eats a ton of food, so I get like the big box of eggs. And it's typically like 12 something bucks, 12 to 15. And then it spiked up to like almost 30 bucks. And it just started coming down, and then now it's like between $5 and $6 for 60 eggs. It's like crazy. So, that's kind of, we show those charts at M2 and CPI, and I think that's all how a lot of it is, at least those type of items have turned out. Bacon and, come all the way back down, but, a lot of those prices have come down, on those, but the non-perishable, like long-term, I just call it junk food. That stuff, pretty much stays, price-wise. So this is something anecdotally I thought was interesting. So, looking at quarter hike here, and now in December, pretty much no cuts. So this is where it is. So, we talked about this a while ago, the dislocation between the market, and it's just kind of walked up, and now they're pricing in pretty much no cuts. So this would be the hike in July to 52, 525, 550. And now it's kind of not pricing in anything. Before, it was even below here. It's like 3 cuts by the end of the year. So, in a month, you can see this has moved from, 4.5 all the way back up here. So that's kind of like the median has moved all the way up here. So the market's kind of pricing that in. We'll have to see, if earnings gets revised, and obviously that's the key driver, but at least the market and the Fed are pretty much on the same page currently. So that's good news. All right, Fed balance sheet. This is kind of strange. So this is where we ran into those banking problems. You can see it's like, it's really, they changed this chart. Used to be bigger, but it's like 8,340. That's trillion, 8 trillion. So they pretty much leveled out, a couple. It's like they're almost, they don't want to, like there's bad stuff coming at this level or something. I don't know what it is, but it's just kind of strange. We may get like 1 week, but this is kind of like, okay, a couple weeks, flat, a little bit strange. This one actually went up. This came down a little, but this is where we ran into problems. So, that's why I keep my eye on this. We still got a long way to go to, what happened the last time they raised. That would be down here, 7,500,000,000. That would be the same percentage drop, where we ran into those overnight repo problems. But, kind of strange that they kind of pausing here. And that's where we ran into problems. So just a thought, obviously I'll keep my eye on this also. So looks like I got logged out. Okay. I think that's it. Yeah, I couldn't find any good stuff on Twitter this week. So I'll just end it there. I'll open up to questions, comments.
Powell's testimony in front of Congress was interesting.
When is that today?
It finished this morning.
Oh yeah, I didn't catch it.
Yeah, and pretty much reiterated they have a lot more work to do regarding inflation, so they're gonna raise rates.
Yeah. Yeah, it's not good. I think overall, raising rates, tightening, it's just not, it's not it's a headwind for the markets, which is why it's hard to get, really bullish. It's had some decent bullish moves, but it's kind of like fighting the current, fighting the Fed.
Yeah.
So,
and I think we're in for a pullback because we are kind of overextended based on the moving averages.
Yeah, I mean that SPX move was obviously way too much. Be interesting to see if it stays above that 4,200 or if it drops back into the range. I think that's kind of only pretty sure it's going to test it, but we'll have to see if that breaks or not. But, Russell's 1900, man, crazy.
Yeah, this is
What's
Dave.
the-
I listened to the Chair Powell also, and he was pretty hawkish. Like Sadir was saying. I think his one quote was that nearly every member of the Fed, of all the Fed governors, anticipate raising rates more this year. So that kind of, I think there was a lot of, when the Fed stopped raising, that they would be done kind of sentiment. And now I think everybody, not everybody, but I think a lot of people, maybe most participants are thinking that, yeah, it's only going to be a pause with more potential rate hikes coming. So that kind of kills the sentiment for a big rally, in my opinion. And what surprised me was the markets are a little down today and were down yesterday, but the VIX is dropping.
Yeah.
It's like we're seeing something. It's like I couldn't figure that one out. But maybe somebody else has some ideas on it. Puzzles me though.
Yeah, we've been talking, that things kind of get unhinged from, what it used to do, in my opinion. So I don't know if it's the tool that we used to have, before the pandemic. So I'm not sure what happened to that thing. I don't follow it that much anymore. I used to follow it a lot, but it just seems like it's not, it's kind of like unhinged from, what it's designed to do. Yeah, so I mean, I think you're right. I mean, we showed all those charts in the past, like, raising rates, like they pretty much raise rates so they break things, right? So, I'm just kind of hopeful they would just pause and let things kind of play out. If they keep raising, I mean, they're obviously going to break something, right? So that's concerning. I think it's best, rates are plenty high. It's curbing activity. Inflation has moderated. I don't know if it'll, go back to prices beforehand, but, at least you stopped it, seems like, in most areas, but I don't know. That if they keep raising, they're gonna break something for real, just like the other cycles that we saw. And I showed charts on those, so that'll be bad. That pivot would be, that pivot would be, sky is falling type pivot. And we talked about different areas. Commercial real estate, I think, is a big concern area. Anything with like anything with loans that like aren't long-term fixed, it's going to be a problem. Like a lot of, from what I understand, a lot of like houses, like overseas, like they have like shorter term, like, and rates like get reset after like a few years. That's real bad, obviously. And then, I think we talked last week, someone brought up about the student loan payments like that kicking in. This is going to hurt the consumer, and we're a consumer economy, so they keep hurting the consumer. It's going to be bad for the economy, obviously. All right, was someone else talking?
Yeah, Josh, I would have thought hey, it's late. I would have thought the commercial loans that would have had some impact by now, and I just don't see it. And I don't know why I don't see it, because from what I hear, they're closing up malls in San Francisco. I went to a mall here in town, the wife and I last week, West Shore, I don't know if you know it, and it was deserted. When I tell you it was deserted, I don't know how those people pay their rents, but office buildings are supposedly the same way. And we've been talking about this for months. And I don't know if, things aren't working right, in my opinion, whether it's the VIX, whether, the banking crisis should have caused more problems. In fact, I thought I'd read that there's still so many banks that are underwater, but
Mhm.
nothing happens to them. There's
Well,
no
you can
effect.
see it. It's kind of like, like the last one, like Silicon Valley, then it was just like 5 others, it just happens all the way. I mean, you can't really predict. I mean, obviously, if they're in the bank, you know, if you're on the inside, you may know when things are gonna, run into problems. But, for us, we know there's issues, so we just kind of watch it. But I don't, how long things take to materialize, I mean, it take quite a while, right?
Yeah, it certainly looks that way.
I mean,
Well,
they probably have, large cash balances that, start burning through those and, um, yeah, it takes a long time.
okay. Hey, can
Yeah.
I go off topic for a second?
Sure.
Is there any talk among at Delphian about using like AI to do your, I don't know, testing, back testing, things like that, where AI is so fast, whatever, but apply it against the database that Delphian has, all the trades going back to 2007.
Yeah. Not specific discussions. Obviously, we're just focused on getting this thing ready for, the public market, which is moving incrementally. But I would say, that'd be a discussion once we get all our stuff in a line here. Like we're working on a new payment system, for customers, so it's a lot easier. We're fixing a new platform, so we're pretty much just focused on that right now. Once we get through all that, obviously, we'll have a discussion with Ashok and see if that can be of help. But nothing near term. No, we got
Okay.
too many balls in the air right now,
Mhm.
trying to get all this done. And
Sure.
you guys are really gonna like the new platform. I mean, it's just streamlined, easy.
Is
Instead
it
of,
going to be on the cloud, or do you still have that server thing that you've got?
the back testing will be on the server, but everything else will be on the cloud.
Okay. Okay.
So there won't be any delay. I mean, the back testing anyway, it's like, it doesn't take long. I do it all the time, obviously. So we're gonna keep that on the servers, and then, and any clicking and all that stuff will be, on the cloud.
All right.
But that
Right.
transition still hasn't gone over yet, so obviously you will know when we're on the cloud. We'll let you know, but
Okay.
we're getting everything else in a row here. And you also talked about the, like the daily trades. So I'm formulating all the results since 2018. So I'm almost at the end of 2021. So it takes a long time to do these, but hopefully in the next week or 2 weeks, I'd say 2 weeks, I should have those so I can show you them all.
Great. Great. Thank you.
Yeah, great questions. Anyone else? Questions, comments? We had our first trade come out, so that's Travelers. The other one, I think it was on the 16th. That one was estimated, so this is the first confirmed. So we'll have to see. I like to kind of watch these first ones, see how we're doing overall for the market. So if they start hitting off, then it's obviously usually a good sign overall for the market. But where it's at right now, you may be advised to wait a day or two. But we'll see how they go. Yeah, so that one came out here. Hopefully, yeah, we have a good earnings quarter. You know, the Q1 this year and the previous year weren't good, but all the other ones were pretty good. So hopefully it's the same. But we'll see.
Hey, hey, Josh, Lee again, talking about that. Sometimes in the past, we've gone back and looked at like the SPX and
Mhm.
how it times out with earning season. So it was previously when it'd be up and down, but when it was low and the earning season was kind of beginning, then results were pretty good,
Mhm.
but it would sometimes change halfway through. So any thoughts
Right.
on that?
Well, this, you know, I would hope for like a, I mean, if I'm rooting for earnings, I'd hope for a nice little pullback here. You know, like a nice drop down to like 4,200. And then, you know, that holds, and then, you know, for all earnings, you know, it holds above 4,200. But this move right here was pretty steep. You know, this run up here, I'd much rather be like, you know, like just crossing 4,200.
Mhm.
You know, kind of like here. This is a nice run up here. That's what you want to see in like an earnings season, right? But you know, I'd like, I mean, I would prefer to, you know, have a nice drop to 42 and then that hold for pretty much, you know, the earnings season. So I didn't like that this, you know, this could be a intermediate top here.
Right.
So
Right.
there's not too many trades here, but you know, they start picking up. So, you know, the first one obviously just came out, but yeah, we typically, I think we have, let's pull up the plan. See when this really starts getting into gear. You got 21st. You got some more, but you know, this next confirmed one's the 29th. So you got like over a week. You know, you got some here that may pop, but then it really picks up here. So that's where, you know, I'm more concerned with, you know, these starting kind of like the third. Get a few here, but really picks up here. So that's kind of like the focus. Like to see bullish market then.
Right.
Yeah. So, you know, I'll take a loss at the beginning, but you know, like these really pick up here. But you never know. I mean, you know, travelers, you know, kind of its own thing, insurance and stuff. So, you know, that obviously, you know, it's tested well. That's been in there quite a long time. You know, even if we get a drop, you know, I think it's a longer time frame. So like, when's the earnings on that? I mean, it's like a month away, the earnings. So you got a long time for that to, you know, be a winner. Right? Gives you time. So okay. So we'll start picking up here after next week, really starts picking up. So okay. Good questions, Lee. Anyone else have questions, comments? All right, well, that's all I had. Joe will be here next week. So I think that's it. We'll close it up here. Thank you all.
Thank you.
Thanks. Bye.
Yeah, thanks.